And then as we go into the feasibility and the plan, that opens up a whole different set of potential funding. You have the U.S. Forest Service Wood Innovation Grants. If you're associated with the tribe, there's a number of different options. There's tax incentives from the state of California in the form of Go Biz California, and then SBA loans also are an appropriate choice at this stage. When you start getting into pilot and development, a whole different list of potential funders. We have, of course, CAL FIRE, who's graciously provided money to make this series of events possible. We have, various innovation funds, and then more basic equipment loans, as well as CDFIs, which are community development financial institutions. There's numerous ones all over the state, and they help get money into the hands of people that can utilize it to build businesses and ultimately strong communities. Once you get going, there's revenue-based financing, sometimes called receivables financing. This is based on you've got money coming in the door. You take a slice of it to pay off a loan. This can be really accessible capital for those that aren't necessarily able to secure traditional bank loans because they don't have the collateral. Then we have SBA loans, which are typically through local lending institutions, local banks, but the government is helping to take on the risk to make the lending possible. And also in your early days, angel equity. That can once again be the bank of mom and dad, or that can be, more sophisticated investors who go out and invest relatively small amounts, say $25,000 to $500,000, as equity investors. So they own part of the company alongside you, with the aligned goals of making the business grow and profitable. And then when you start getting into the scaling and growth stage, whole nother set. This is where the USDA business and industry loans open up. Those can be, I think, up to $5 million. Then there's growth equity if you want to sell shares of your company. So if you're, growing a big wood processing facility, just like if you're growing a big company in tech, sometimes, it'll take a lot more than what one could muster with debt and the friends and family collective. And then finally, bonds, corporate bonds, which is just another form of debt, requires repaying compared to equity, where somebody owns a slice of the company with you and they're in it for the long haul. Um, so early on, grants are, really a great means to get capital if you can get it, is the caveat. Grants don't have to be paid back, so super appealing, but as a result, they tend to be very competitive. Um, you know, uh, you know, Regine can tell you, CAL FIRE has annual grants, but they tend to be very competitive, especially I think as more people become aware of them and more people are working towards helping to mitigate the fuel load in California forests. But in the early stage at ideation, there's numerous community foundations that can be potential grantees. A nice thing about, these private grants versus public being funded by the government is that they often come with fewer strings attached. These tend to be, highly dependent upon geography, as you can, you know, if you look at the, first two under community foundations, one is, of course, related to Tahoe. Then there's the El Dorado Sierra Nevada Foundation. Um, these are generally, smaller organizations that don't have the resources of, say, a Cal Fire, but they can really provide that early capital that ideas need to get off the ground. Um, when you move further along in the process to the feasibility and planning process, there are numerous state planning grants, which can be through the Sierra Nevada Conservancy, which is part of the state of California. There's the CAL FIRE, Tribal Wildfire Resilience, which of course is focused on Native American tribes. And then the U.S. Forest Service Wood Innovation Grants. These tend to be for emerging technologies rather than, existing technologies like sawmills and lumber manufacturers, but they can be for new technologies that are going to provide new ways to offload wood from our forests. These are often associated with research projects through universities. So they don't apply to everyone, but of course, if your project does qualify, um, it's it's much less competitive than, say, an open grant that everyone can apply through. Um, Also going forward, in the feasibility and planning stage, there's tax credits and debt. So GoBiz California offers various tax credits from simply giving a discount on sales tax, which if you're buying a $100,000 piece of equipment, obviously they give, Regina, do you know if it's 4 or 5% that they give as a reduction?
I don't know.
It's somewhere in that area. They have two sales tax programs. One, everybody qualifies for. You just have to fill out a form that is, I think, literally a matter of minutes. And when you're buying equipment, instead of paying the full, I guess, 8 to 10% of California sales tax, you get 4 percentage points or 5 percentage points off. So meaningful discount on a $100,000 piece of equipment, but you know, just a discount. It's not going to provide the whole cost of a piece of equipment. SBA, Small Business Association, also government funded. They have a microloan program for loans up to $50,000. So this is great for smaller, smaller businesses, entrepreneurs for things like a mobile sawmill that's not, in the millions of dollars, but perhaps you just need a little bit of working capital. And I say little bit, it's all relative. A small amount of working capital to help yourself get going. The average loan size for the SBA loans is something like $13,000. They have attractive uh, interest rates and can be payable over something like 5 to 8 years. So for somebody that's not building a rocket ship, but a smaller sustainable business, and they need a bit of capital to make that possible, this can be a really good loan program. And then we have the iBank, which is another branch of the state of California. It's amazing how many different places the state can offer financial assistance. But the iBank is a program to the state of California, and what they can do is offer um, guarantees. So this, when you're borrowing money, the bank or other lending institution, they want to get their money back, right? They want to get their money back with interest. And in the earlier stages, when you're planning, um, determining the feasibility of a project, but you don't actually have assets to lend against, or you have assets, but they're personal and you don't want to risk them, um, finding a program in which a guarantee is provided can be a really wonderful way to mitigate risk and make a project comfortable. So the iBank can provide guarantees for other loans in which you then lower personal risk because the iBanks is taking on most of it, up to 80%. And then when we're actually getting into the place where we're running pilot projects, starting to generate revenue, and getting products into the world, um, there's even more choices that open up. CAL FIRE grants are, of course, very popular. Um, there's the Business and Workforce Development Program and the Joint Institute for Wood Products Innovation. That, of course, tends to be for newer technologies. Um, then we have the U.S. Forest Service Wood Products Innovation grants, infrastructure assistance. Those tend to be focused on, of course, Forest Service, federal lands, and tribal lands. But those grants can be up to $1 million. And I saw somebody, Regine, do you want to moderate the chat and let me know if there's, any
Yeah,
questions that I should attend to? Perfect.
I'm happy to do that. I just put a link in the chat to a list of some other community foundations throughout the state. Um, those ones there are just sort of some of the examples of community foundations that have operated within the forest sector, but there are a whole slew of such foundations, community foundations statewide.
Yeah, and they're local organizations. They're often you can make connection, go out and actually meet somebody, and let them know what you're doing, help refine your application, tailor it to what they're looking for. So, in those cases, I would definitely suggest, don't just go online and fill out their form, but do a little work on LinkedIn, see who's involved with the foundation if you can, make some personal connections, and really get an understanding of what they're looking for. Because um, how you tailor your application for, even if it's you're not changing your project, but how you tailor your application can really make a difference for making it fit into what these organizations are looking for. And then when we get into larger projects, there are, fund investors. There's not a ton at the smaller stage, but there's a company called Blue Forest, which their whole charter is to invest in wood products businesses. Um, California iBank came on with a $25 million investment. I believe that their fund is something like $50 million, of which they still have more than $25 million to deploy. So for folks, like Jeff, with a project where he needs $7.5 million to get off the ground, with a new technology, with the potential for a lot of growth, this might be something worth exploring. Regina and I can both tell you they are very slow, and this is not money that you're going to get tomorrow or even by the end of the year. But they're pretty judicious. They're a private investment fund. They have to make their returns while also having impact. So they're, I would say, pretty guarded in the money that they give out. But they do have in this industry for earlier stage companies, relatively deep pockets. And then also in the subject of state financing and the iBank, they also have industrial development bonds that are up to $10 million, tax exempt. So for those holding them, there's some financial advantages. Um, this is focused on manufacturing facilities. Obviously, it has to be a larger project in order to, be able to borrow $10 million and show the pathway for paying it back. But as you get into that larger scale, there certainly are some funding choices.
Neil, I would just add to that pilot and development. The federal government also has their timber production expansion program loan guarantee or
Hmm.
USDA loan guarantee program, which is typically, I think probably geared towards larger likely stationary type facilities, but that fund was set up, was that maybe 2 years ago, I think? Um, and is supposed to, it's my understanding that it is expected to continue. I just, yeah, timber production expansion program.
And yeah, those loans backed by the U.S. Department of Agriculture, working with local lending institutions, they carry much of the risk, much like the iBank, where they cover a significant percentage of the guarantee. This ends up being a means to get over the hurdle of having to have substantial collateral to borrow against. Um, Next, we'll move into a conversation about the capital stack. So, you know, I look at capital stack like you're building a house. Depending if you're building just like a little shack in the woods, you might be able to do that with just, the money that you have saved up or what you can get from friends and family. But as you build a bigger house, that 3 bedroom, 2 bath, you might need to borrow some money from the bank if you decide you're really going for it and you're building a 17-story skyscraper. You're going to have to get different funding. That often would then come in the form of money from equity partners. And uh, you know, a capital stack is the combination of all of those. There's no one right answer for any one business. It's really a matter of piecing it all together to provide the capital to allow your business to get off the ground and to grow. So the three types of funding, grants, those are from private or government institutions. They don't require repayment. They don't provide any dilution. You still own 100% of your business, but the two drawbacks are they can be very to extremely competitive, because it's ultimately free money. And depending on the program, they can often come with strings attached, um, so that the money has to be deployed in certain ways. Debt in its many forms, whether that be a small business loan, whether that be a bond, whether that be um, debt based upon revenue streams. The fundamental aspect of debt is that it ultimately has to be paid back. And that can be good and that can be bad, right? Most of us have probably had mortgages at some point. Great way to own a house before you have the however many hundreds of thousands of dollars saved up to move into it. Um, but debt can also end up being really expensive depending on the program. There's a lot of so-called business lenders out there that aggressively advertise online that charge rates that are more expensive than credit cards. So you really have to be guarded with debt and make sure that you're getting the right program, because the terms of repayment, how many years repayment is spread over, and what interest rate can be a huge fundamental difference over whether it ends up making your project feasible or not, because you ultimately run out of money, unable to pay back a loan. And debt has to be collateralized, typically in some way, shape, or form. Um, a lot of loan programs for businesses, even though you might be running an LLC or corporation that provide personal liability protection, they often require personal guarantees. So, you might very well be risking your house, your car, your firstborn if things don't work out, the business goes under, and the money has to be paid back. So that's something that you have to be very guarded with debt. Equity is when you're sharing ownership of your company with other individuals or an entity like I don't know, an equity fund, like with Blue Forest. This can be really great because you sell a slice of your company and you don't have to pay it back. So you're in it with equity holders. Things work out, great. They own a slice, they get their payday. If things don't work out, they feel the pain with you, and you don't owe money at the end. The downside, of course, is that you are giving up a slice of the pie. And depending on the type of the business, this might be a great trade-off, or it might not. Let's say in the case of like a mobile sawmill, you give up 20% to bring in the capital needed to buy that piece of equipment. It might hinder future profits because you have to give 20% of those to your investors. But at the same time, it might mean that you're able to buy that piece of equipment, which you might not have been able to do otherwise. So there's always trade-offs, and it's important to consider these when deciding on what capital stack is right for you. Um, Generally speaking, we want to go for grants where we can. Um, don't necessarily want to spend months or years trying to chase down grants that might not develop. But really putting some time into learning about different grant programs uh, and seeing what's appropriate for you can be super helpful. And this can be as simple as spending some time on ChatGPT or Claude and describing your business and where it's located, um, and letting it do the work for you as far as finding out where those programs are, and how to apply for them. And then, debt and equity, discuss the trade-offs. It's really about balance. Debt, for smaller businesses is generally the way to fund, because if you're looking to grow that business that's going to create a job for you, give you the money to feed your family and pay your rent or mortgage, but you're not looking to grow it into a multi-million-dollar business, some form of debt is generally more appealing than having to give away, a slice of the profits in perpetuity. The downside, of course, is the risk, and that ends up being a really personal decision as far as how much risk you're willing to take on. If you're willing to take on personal risk um, and sign personal guarantees, or if that's just something that's unacceptable, and then you have to find other ways to go about um, finding that funding. And then equity, you know, for in my personal experience, equity was really the only way to build. For our ice cream company, ended up being a couple different manufacturing plants. But after 15 years of running the business, I only had something like 20%, because it took so much capital to get to that place. Um, so it never would have been possible without it, but there's a trade-off. There wasn't the the big payday when you only have 20% and your investors have 80. So I would really advise to just be very thoughtful and guarded in going about deciding about the combination of debt and equity for your business, and making sure that you're coming up with a plan that's realistic, not being overly optimistic about your ability to pay back debt. Because so many businesses fail, not because they don't have strong long-term potential, but they simply run out of cash. And having to pay back loans ends up being probably one of the two biggest contributors to that.
I would,
Of
if I can just add
course.
in relation to grants and the strings attached to grants. If you're thinking of pursuing grant funding to support your business, Um, be mindful that if you use public funds to purchase equipment, uh, they're state funds or federal funds, the state or feds will have a vested interest in that equipment for its useful life, typically till the value of that equipment is less than $10,000. So that can extend over many years, far beyond your grant term. One strategy, one sort of a strategy that you may consider is using grants to help support some of your projects, soft costs, development, installation, um, legal counsel in support of contracts and agreements, um, the work associated with securing the balance of the capital that's needed, those sorts of things, rather than the equipment itself. CAL FIRE will fund the actual equipment. The Forest Service also will fund actual equipment, but just be sort of aware that there are strings tied to equipment bought with public funds beyond the grant terms. And we can, if anyone has questions related to that, happy to talk offline or at the end if we have time today.
Good call out. Thanks, Regine. So grant funding and incentives. CAL FIRE, our gracious host today, is of course one of the big grantors for wood products and bioenergy in the state of California. Their grant programs are super competitive because they're well known. And of course, there's a huge focus on building wood products in the state of California. But the grant program provides up to $3 million for wood products infrastructure. It's important to note that there has to be a nexus, there has to be a connection with reducing wildfire risk. So if you're just, I don't know, harvesting wood from a stand that isn't necessarily in a high wildfire risk area, they're probably not going to be interested in the project. It has to be something where you can demonstrate through the grant application that you're going to help lower wildfire risks in the state of California. Um, they're focused on value-added processing and biomass use as a result. The grants do have a match requirement, meaning you have to put in, depending on the program, it's $1 or $2 for every dollar that they give you. And then an important note about grants as well is that they tend to be on the reimbursement side. So you have to lay out the cash first, then get reimbursed for it, which can be a 60 to 90 day or even longer process. Regine, how long would you say that CAL FIRE grants typically take on the reimbursement side?
Yeah, I mean, I think it's easily 6 weeks on a typical invoicing process, and that's assuming when you submit your invoice initially that it's correct and approved quickly. So it can take maybe sometimes 2 or more tries to get an invoice corrected to the point where CAL FIRE will accept it. So yeah, definitely the cash flow can be a hurdle, particularly for small businesses. So just planning for that and in advance and thinking about things like a business line of credit to help overcome that time lag can be really important to successful implementation of a grant.
Yeah, having a grant and showing the money is coming in can often be enough for a line of credit in order to borrow money, just to basically tie your business over while you're waiting for those funds to come in. CAL FIRE grants, they operate on a quarterly cycle. And you can, of course, check online to see what the deadline is for that. But the grants are, like I said, highly competitive, typically far oversubscribed, far more applications for money than they dole out. Um, and great thing about grants, of course, though, is that you can apply for many at the same time. They don't just because you apply for Cal Fire grant doesn't mean you can't apply for, say, U.S. Forest Service grant. Um, you can go for them all, and certainly seen companies that have gotten grants from multiple sources, state, federal, and private. Um, Also on the grant front, we have the USDA, U.S. Department of Agriculture, Forest Service, Wood Innovation Grants. These are larger. They're in the $1 to $5 million range or even greater, focusing on emerging technology as well as workforce development. Like I mentioned earlier, they often require some sort of research partner. So you know, showing that this is in fact a new technology, the thesis of what it is and how it will work has been proven, that it's not just a back of the envelope idea that you have. Um, the government wants to see that this is actually a feasible technology before doling out these really substantial amounts of money. For this program, the grants are due April of each year. So for anyone in this group that applies, that this could apply to, the deadline is sneaking up. So I would definitely make a note if you think this might apply to you to look into it soon, because the deadline is next month.
Yeah, and I would just add, typically the Wood Innovations Grant are solicited beginning the third week of October every year. This year, the timing's a little bit later, but usually they're solicited third week of October and due sometime in December or January. Um, but again, yeah, this year it's pushed back, but this is longstanding program, not really focused so much on the early stage sort of ideation and sort of pre-feasibility work. Don't bother applying for a feasibility study, it won't be competitive. But if you're beyond that initial feasibility study, this program can fund sort of those, kind of piloting later stages of development tasks, things like permitting, contracts and agreements, any sort of design work. Um, for tribes, it can fund mobile equipment. Um, yeah, but it's a great program.
And if you don't have a research partner that you're working with for your technology, there might also be means to partner with a UC Extension, because they do have public-private partnerships in order to help get projects off the ground. And then tax incentives and federal programs. Um, Important to note that under the current administration, just across the board, a lot of federal programs have been put on pause, have been canceled. So this information, may or may not change. But the feds do offer a 45 investment tax credit for qualifying biomass equipment. Um, I don't know the status of this. Some of my work is in solar, and those tax incentive programs have all been canceled. Residential ended at the end of the previous year. Commercial is ending July 4th of this year. So uh, there might very well be um, investment tax credits that are going away soon, that still exist. So very timely to look into these. Um, the USDA Rural Energy for America program, um, and then there's also economic development grants on the federal side. Um, from the great state of California, which we all live in, they like to tax us heavily, but they also like to give taxes back. So there is the California Department of Tax and Fee Administration, um, the sales tax reduction that I mentioned. It's for timber harvesting and manufacturing, 5% off of your um, sales taxes. Um, And that doesn't require any sort of application. You just need to have the right paperwork when you purchase. And it has to be done at the time of purchase, is my understanding, not retroactively. So make sure that, when you are buying equipment, that you look into this ahead of time and have your paperwork lined up so that you can qualify for this discount. Um, on on the application side, and I forget what exactly all of these letters stand for. There is a program to apply for a complete sales tax elimination, but this is something you do need to apply for and is competitive. The next program, or the next window, is actually opening next month. Um, and then the iBank small loan guarantee. Um, car they basically carry the risk of a large part of your loan. This can be for equipment, working capital, construction, for small businesses up to 750 employees. So, really wonderful way to make loans much more like equity in that it eliminates a great deal of the risk, and therefore a great deal of the collateral that's needed. And like we said earlier, the reality check on grants is having the cash up front in order to um, have time to be reimbursed. Then on to debt financing. So with debt, there's a great deal of options out there. So going to try to focus on the main ones. Um, in this world, uh, we all need a lot of equipment. Wood products businesses are very capital intensive. You're dealing with real things that require a lot of equipment to get them out of the forest, to modify them, and then ultimately get them to the consumer. So for earlier stage, smaller businesses, especially if there's not personal assets or you're just simply not comfortable um, providing those as collateral, equipment financing can be a really great way to go. And there's both public and private equipment financing um, programs out there. The asset ends up being the collateral. So you borrow money for a mobile sawmill. Hopefully your business works out and you prosper, and you have a whole fleet of them eventually. But it's an unpredictable world, and if it doesn't work out, um, often, with equipment financing, your only collateral would be that piece of equipment. Um, and because the lender can get the thing back, they're not lending money for, say, planning or feasibility studies, things that they have no means to ever accrue the the value of. You tend to have pretty attractive lending rates. I'd say generally, they can be in the 6 to 12% range, generally 3 to 7 years. All of this can, of course, vary. Um, the the term of the loan tends to be, a fraction of the useful life of a piece of equipment. But this can often be, really attractive capital for the small entrepreneur that's just getting going, needs that piece of equipment or pieces of equipment to get their business off the ground. And then there's SBA 7 loans, and I think, we can also put the U.S. Forest Service, USDA, business and industry grants under the same category, up to $5 million. And the key here is that the government is providing guarantees. So they're taking on the risk, or much of the risk, um, so that you have access to capital without, literally risking your home or your farm. Um, these can be used for a bit more things. Unlike, the downside of equipment financing is it's only for that piece of equipment, but they can provide money for working capital, for real estate, equipment. These tend to be longer term, I think up to 15 years. Um, but you need to have been in business already. So this is really more for businesses that are up and running and have the opportunity to move into that next phase of growth. And of course, and decent credit as well. Then um, going back to California iBank, um, they also provide guarantees of up to 80%. Um, their max loan size is 5 million, also for small businesses. And the priority is for, job creation in underserved communities. Tend to have loan terms of about 7 years. And it can often, I think it's important to state, it can often be a matter of combining loan programs. Equipment financing can be great for the physical equipment because you can get those lower interest rates. Um, but then, if you need a building to put it in and land to put that building on, you might be looking at something like um, a USDA B&I loan or the SBA 7 loans in order to um, complete that capital stack with debt.
And I would just,
And please,
sorry. Yeah, I was just going to add, some of at least a couple of the loan guarantee programs I'm familiar with do require the borrower to put up, I don't know if this is the right term, Neil, but essentially kind of matching contributions or collateral. And um, if the borrower were to have grant funding, you can use that as it's effectively, equity in your project that can be counted um, towards that loan guarantee requirement.
yeah, so tagging on with what Regine said, I think for the USDA business and industry loans, I think that they'll lend up to 80% of a project, which means you need to provide the other 20% either from personal capital, from capital that comes in the form of grants, or from equity investors. And Jeff, I see you have a question.
Yeah, I've gathered or been told that in general, lenders don't want to lend when there are multiple lenders in a project. So, in other words, they don't want to be one of three loans that are on a project. Is that your experience? Is that the case, or what are the expectations and limitations there in terms of multiple lenders on a given project?
Yeah, it's really going to, like many things, it's going to depend on the project and it's going to depend on the lenders. Lenders want to get their money back. And, when you when you fill out an application, it goes to underwriters, it goes to a committee of people that ascertain the risk of is this person or is this entity going to be able to pay this money back? They would prefer to be the sole lender because then they can have, guarantees on all of your assets versus let's say, you have an equipment financing loan, whoever provides, that money for, say, a sawmill is going to have, they're going to have their hands on that sawmill until that loan is paid off. They're going to have that first right. So involving multiple lending institutions can be a little complicated in that they're all going to want to mitigate their risk as much as possible. Um, and therefore, they're all going to want to have basically everything as collateral. But you can certainly work with lenders in order to do carve outs. On the flip side for lenders, if there are multiple lenders, that means that there's more money going into a project, which can often lower risk because then it means that the project is potentially properly capitalized as opposed to, one lender not being willing to take on all that risk and not being able to provide all the capital truly needed to get to the project to the point where it's cash flow positive. So, you're probably not going to get, let's say, two bank lines of credit from two separate institutions, because those would have the same collateral pool. Um, but you might very well be able to work with, say, a USDA B&I loan in conjunction with some equipment financing. And Regina and I worked on a project where I think that was the case. So it all depends, and there has to kind of be a clear line of sight for lenders about how they're ultimately going to get paid back, and in the event of insolvency, who owns what.
Okay, thank you.
Yeah. And then also on the debt side, we have revenue-based financing. There's been a lot of innovation on this front, I'd say, in the last 10 to 20 years. Probably just, the proliferation of the internet and lenders being able to find businesses that this kind of program would apply would apply to. Um, these can take various forms. It can be a slice of revenue. It can be certain revenue streams that go into paying somebody back. Um, I'm working with a company now that their primary lending is all revenue based. Um, it's really appealing because the owner, in this case, doesn't have to have any sort of personal guarantee. The whole guarantee is based upon business assets, and um, the among those assets being the business receivables. So when um, payments come in, they actually go straight to the lender rather than to the business, which helps, add a layer of security. And these can be really great businesses, really great loans for, say, a seasonal business that needs to purchase a lot of inventory in the off season, like a firewood processor. You're processing timber, you're putting a lot of money into the labor to get it cut up, you're paying your rent, and you're not going to get revenue until, the end of the summer. Um, but these businesses have the assets to pay off loans, and they know that the revenue is coming. So these can be super attractive. Um, and then there's the CDFIs, which are the Community Development Financial Institutions. I'd say, dozens of these around the state. And then rural community assistance corporations. These require, some legwork to see what's out there and what might apply. But these entities exist to help businesses in their community get off the ground, to do the work that many of you are doing, to lower, wildfire risks. Um, and, they can be much more like partners than, say, just going to a bank and getting a regular business loan. The USDA business and industrial loans, those can be actually up to 25 million for rural businesses, but of course, most people who are working with wood products have what are considered rural businesses. Um, if you look at the map of where this applies to, it's something like 98% of the United States by land. Um, so these loans can, you know, especially on the community side, can be very helpful, can be feel more like partnerships than, say, a traditional bank relationship. And then when we get into larger scale businesses that need, significant capital to go forward, and I don't think this is really going to apply to anyone at this stage. It would be industrial bonds. The the issuance of securities, almost like shares of stock, but instead of owning a slice of the company long term, it's a loan agreement with repayment over time. But I don't think we need to really get into that at this moment. And then, looking at kind of different deal structures and how things could play out, put together just kind of some illustrations. So um, we have a sawmill startup that needs about $570,000 worth of equipment. Um, that might be achieved through a $400,000 equipment loan. 170,000 would then have to come from personal capital, which could be from savings. If one is fortunate, it could be a matter of, some money lent from, friends and family, like many businesses do to get off the ground. Um, and then, you know, of course, for a sawmill, for any business, the equipment is only part of the story. You need the working capital to buy the inventory, to buy the logs, to provide the money to pay the workers to process the wood, to carry the inventory to the point where you can start generating revenue. Um, Something like this, the $400,000 equipment loan and the SBA microloan would be a monthly repayment of about $9,200. So about $110,000 over the course of a year, which would be appropriate for a business generating about $500,000 in income. As we look into a larger scale facility, um, it's a very different capital stack. Uh, so a mid-scale processing facility, let's say, a, a stationary sawmill or a pellet manufacturer, this could be a $1.2 million USDA loan. So if you're getting a $1.2 million loan, that would be about 80%. There would be a capital requirement for the business to provide the other 20%. That's where a grant potentially comes in, or equity investors. So um, the B&I loans can be much more attractive interest than you would get from a straight out bank business loan. And of course, having a good portion of the risk covered through their guarantee program. As a result, they can have significantly lower interest rates and also long-term repayments, which can be similar to a mortgage. And the benefit, the impact of lower interest and longer term to repay is can be an enormous difference on a monthly loan payment compared to higher interest, which of course can be fundamental to allowing a company to stay ahead of its cash flow and stay in business. So this project in the example is about a $2 million project. The equity portion required by the USDA could be covered by a $300,000 CAL FIRE grant. Of course, highly competitive, but they are doling out tens of millions of dollars a year. And then $500,000 on equipment line of credit. So on this loan, $1.2 million compared to the $400,000 loan in the first example, the repayment is actually lower because of the longer term and presumably slightly lower interest rate than you're going to get with most equipment financing. So interest rate and term are absolutely key. And if we look at a smaller operation, a mobile mill, 880,000 in equipment financing, just using the equipment as the collateral without taking on that personal risk. And then, something like a $25,000 revenue-based line from any of a number of lenders. And this is a way that many folks are entering the wood products business industry because of the low startup costs and the ability to get the the capital needed to get off the ground versus a much larger project requiring land and a building, and potentially millions of dollars to get going. Um, and this might be a good time if anyone's interested in sharing, kind of, for those that are already in business or those who are just getting off the ground, about uh, if people are comfortable sharing what you've done for your capital stacks, how you've gone about thinking about this, um, and what is right for your business. But this is also, potentially private information. If you don't feel like sharing, that's also fine.
I'm okay with sharing my situation if you want to take the time to hear it.
Great.
Uh, okay, so I've been working on this project to create a production facility processing biomass for 4 years. I've got a feasibility study. I've got analytic research. We're doing growth trials. Um, I've gotten 5 pre-seed grants for various aspects of the project. So I feel like now I'm in the position to apply for the larger funding. And the way I see my options right now, I think I need substantial grants for this to get started. Um, so the before I can get any lending, I need equity. I'm looking at various different government guaranteed loans. The one program or a set of programs that you didn't mention with the USDA are the biorefining programs. There's Section 9003 and then the attendant BDAP program. So Section 9003 is a government guaranteed loan with the USDA for biorefining, taking any kind of an agricultural product and refining it into a value added product that can be sold on the open market. So that's what I plan to do, take bio residue, waste, whatever you want to call it, and make it into a product for horticulture. So I've been told by a USDA representative that I really qualify for that program. And then BDAP is a grant program that's associated with that, where if you qualify for Section 9003 with a loan, then you can apply for this grant. So that's a program that I would like to take advantage of. But I'm also looking at the BNI. But before I can get any kind of a loan like that, I need to have some kind of equity. I don't have much myself. So I'm looking at grants. And there is the CAL FIRE grant and the Wood Innovations grants. I will be applying for both of those. However, I'm not sure that I'm really going to qualify for those because it seems like they want to come in when you've already got a fair amount of your stack already in line. So it seems like in order to qualify for those grants, I need to have some other money, but you can't get that other money until I've got some grants. So I'm kind of in a chicken and the egg situation. No, that's my basic situation. I could prattle on, but I won't. So I guess, yeah, that's the best I can do right now is to hope that I can qualify for these grants. If I do get a substantial grant, then I'm in a much better position to apply for any of these kinds of guaranteed loans. So what
I
do you
would
think?
offer, just on the grant side, and then maybe Neil, you can talk about the debt side. In terms of, I get it, the chicken and the egg. It's tough. Couple things. You should, in addition to Wood Innovations Grant, Jeff, you should consider Wood Product Infrastructure Assistance, which has $1 million maximum award. That solicitation is currently open, and you could apply to both Wood Innovations Grant and WPIA. So you could potentially realize 1.3 million from the Forest Service.
Yeah, I'm
Both.
aware of that.
Yeah. And then in terms of like how to strengthen your application, One strategy could be your grant application. One strategy could be to have a draft term sheet with your lender who's going to have that, who's going for whatever loan guarantee program you anticipate using, and having that draft term sheet to show that this is real, that you've done your homework, you've sort of narrowed down to where your capital is expected to come from and how the grant will complement that and is necessary to get your project over that financing hurdle.
Okay, hold on a second. This is new to me. Draft term sheet. So are you saying go to the lender and ask them to give me a draft term sheet, which is not a commitment on their part, but is that like what requirements they will have if ducks fall into a row? Is that correct?
Yes. Yeah, you could have exactly. You could have that. I've also seen where lenders, like the bank, not the entity that's providing the loan guarantee, but the bank will write a letter saying that that you're if you can't get a draft term sheet, you could have a lender issue um, a letter stating their strong interest in your project, the fact that you're working together to reach a deal, and that you anticipate securing financing as soon as X date, assuming these sort of other conditions are met. And then within your application, you would address how you are meeting, all those sort of conditions and um, making your project ready and ultimately with a high degree of success.
Okay, so
Chance of
that's
success.
basically kind of like a letter of interest from the bank as opposed to
Mhm.
a letter of intent.
Yeah.
Exactly.
Yeah.
Non-committal,
Yeah.
but
So those
directional.
are just some strategies that could help to strengthen a grant application to show like you're not nowhere. You've done your homework, you know where you're going to pursue your debt from, and these are the requirements of that debt, and this is how the grant can help to get you there.
Uh-huh. Okay, now this kind of raises another issue, which is the requirement for other funding for like the CAL FIRE grant. So to get $1 million, you need um, to
one to
have,
2 million of matching funds.
yeah, yes, uh-huh. So I don't have those matching funds. What I'm wondering is whether they would consider granting the award based upon the possibility of getting the matching funds from another source. Are they very strict about having those matching funds in hand when you apply?
Your application will be much more competitive if you have a commitment for the matching funds ahead of time. Um, if you don't have that and you're counting on using the debt as your match, you would all the more reason to have that letter or term sheet to show like this is real, like you will have that. Um, I have seen applications that were awarded funding where they've taken that strategy. So it can work. But as you know, both Forest Service and CAL FIRE programs are, highly competitive, oversubscribed. So you'll want to make that letter from your lender as firm as possible.
Yes. Okay.
And this, your example, Jeff, it definitely seems like a place where um, if there's a community foundation that's interested in your work, that could be a potential means. If there's local entrepreneurs, potential angel investors that are interested in your idea and its benefits to the local community, I think those are means worth exploring in order to get over, um, that barrier of that initial capital that you need. Um, you know, it it can be so difficult in these early stages, um, and definitely to overcome that chicken egg problem, you have to kind of, be persistent and thorough and explore all avenues.
Yeah, it's kind of like everybody has a willingness, but they don't want to commit until they see that everybody else has committed. So I've heard of circumstances where you kind of get everybody together on one Zoom call, and then everybody says, "Well, if you will, then I will," and then all of a sudden it happens.
Hmm.
Um,
And you can, yeah, also get, say at least on the equity side, conditional investors that said, yes, this money will go in if this grant is achieved or if this amount of debt is realized. Um, that's quite common as well.
yeah,
Yeah, nobody wants to just throw in the first money if it means nothing on its own.
yeah,
And and I would just encourage you to, with Match, think creatively. If there are partner contributions to your project, even if it's just, I don't remember if you own your site, if you're leasing your site, um, any sort of soft costs that you expect to incur during the grant term. Just all of those sorts of costs can be counted as a matching contribution, which if you were to provide that, that just shows, your kind of skin in the game, if you will, and CAL FIRE Forest Service, they like to see that.
mhm. Okay,
But
good. Thank you.
yeah, it's extremely frustrating, and I know from personal experience fundraising, it can be just so entirely frustrating that like you're talking with people constantly that are interested, but no one's willing to open up their wallet. But persistence, is the key when it comes to fundraising. I mean, I know with my business, it ended up just being a full-time job for months, but we always got over the threshold of what we needed.
Yeah, I've kind of come to accept that. And it makes sense because everyone who has their funding wants to protect it. They want to know that the grantors want to know that the money is going to be used effectively. They can demonstrate that the money they've given to somebody has been used effectively. Banks are going to be very protective, and equity as well. So it makes perfect sense. And so, yeah, I respect what you're saying. It's persistence. The other thing that I have kind of concluded is that I don't feel like it's appropriate for me to seek the VC funding. And if I was to find, there was actually a local person who suggested investing in this, and I did not pursue it with them because I don't want to be responsible for their life savings, right? That's one thing. And another thing is that VCs want a pretty high return, generally. Um,
Exactly.
and biomass just isn't a high return. I think the best thing that we can hope for here is that we're going to have a self-sustaining business that's going to pay its bills. But it's not the next iPad, and it's not going to triple their money in 4 years. So it just doesn't feel to me like seeking VC funding is appropriate. But on the other hand, you've got what are generally termed impact investors, who are people who are not necessarily trying to triple their money, but are looking to put their money where it will have an impact, but at the same time, uh, at least not lose their money and increase the value of it to a certain extent. So, what's your thoughts there, and how do I reach impact investors as opposed to VCs?
You're stealing my thunder here, Jeff, because you just covered half of the next slide.
Oh, okay.
Um, I think that, there's a lot to be learned online as far as who impact investors are. And there's many that are interested in just different things, right? There are those that are interested in specific geographies. There are those that are interested in specific environmental impacts. There are those that are interested in investing in supporting certain groups of people. Um, but there's hundreds and hundreds of impact investors at various stages out there. And the best way is to spend some time with your friend ChatGPT and Google or Claude, and describe what your business is, where it is, who you are, and you'll be able to get thorough lists of impact investors. It's always best if you have,
Oh,
sorry, go ahead.
I was just saying, oh, I had not thought of asking ChatGPT to tell me about impact investors that might be interested in my specific corner of the world.
It knows everything,
Yeah.
or just about, but that can be a really, I've done that for another business. It can be a great way for finding potential investors. Yeah, so
Okay.
back,
Now, suppose, excuse me,
no problem.
suppose that I do find someone that I think is an impact investor that I might want to work with. Any kind of investment like this, the terms are not written in stone, kind of like they are with a bank loan. How do I assess the terms that someone might offer? How do I come up with terms that I might want to offer to an impact investor? I have no idea about how to approach the terms of such an investment.
Yeah, I mean, I would say, backing up for a second, just, you know, you create your list, you get in contact with people. Um, you know, Investors at all stages, they have, and especially because information is so readily available now, they just have endless requests for their money. And they have to be, it's kind of like applying for a job now. You used to apply for a job 10 years ago and there would be 20 people applying for them. But, now with everybody using AI to apply for jobs, there's hundreds and hundreds of people applying for, every single job that's out there. It's rare that you click on something LinkedIn and it has, less than 100 people applying. Um, I think the soft sell approach of a conversation, of explaining who you are, what you're doing, what your goals are, can be much more effective than, just jumping in and asking for money because they'll let you know if they're interested. But an important thing about investors is that they almost always know other investors. Um, so when your project isn't necessarily right for them, ask for a list of two or three other contacts of people in their network that your project might be right for, and ask if they're willing to do a soft introduction in order to expand your network. Um, you know, you can also, reach out cold on LinkedIn. It's not as effective as introductions. Um, but as far as the terms of a deal, it's really going to depend where you are. Most deals have, what would be called a lead investor, the person that is going to either, come on earlier or come on with a the bigger investment, the biggest investment in a round, and they're ultimately going to be the ones to set the terms. You can look at, once again online, or something we could potentially, look into with office hours, um, of how businesses in your sector at your stage are valued and what that would look like. What a fair, pre-money valuation is for a pre-revenue company in the planning stage. Um, so there's no, like you said, there's no right answer. It's going to be a discussion. One thing I always advise people is, you know, don't be afraid. Don't get hung up on valuation. Don't lose potential investors in the early stages who are potentially critical in getting your enterprise off the ground, just because of some percentage points of equity. Um, this isn't Shark Tank. It's not a hard and fast negotiation. Um, but, a lot of times entrepreneurs are surprised that they have to give up larger slices of their company in order to get the equity when they think that their idea is going to be the big one that changes the world. But it comes with risk. A very small percentage of pre-revenue companies will ever have a successful financial exit. And so venture investors are aware of that. And, they try to price their investments appropriately so that, when 7 out of 10 or 8 out of 10 don't generate the return that they need, they need the other one or two to do that. Um, yeah, so backing up for a moment, just as far as the different types of equity investment, we stated earlier, you're giving up a slice of your business in exchange for capital, um, which of course, on one hand can sound painful, but it can also make your business feasible. Steve Jobs never would have built Apple from his personal savings. And he never would have been able to do it with debt. There's certain businesses that require large amounts of capital, or probably a better way to phrase that would be relatively large amounts of capital that personal savings just simply can't cover, or personal access to debt financing can't cover. And there's different types. So there's, in the earlier days of an enterprise before revenue, or when companies are small, there's angel investors. Those can be anyone from your college buddy to people who make a living of investing, their own capital in small businesses. A lot of them tend to be former entrepreneurs, people who have high net worth, either from their own doing, often kind of people from wealthier families, people with interests in certain sectors, um, end up coming on board as angel investors. Typically investments of 25K to 500K, but they can be much more substantial. Um, in in my business, we had an angel investor that it was north of seven figures over the years. Um, and they can also be great because they can be experienced business folks that have other people in their network who could be potential investors, who have gone through the process of starting and growing and selling a business and can provide advisory as well. But the trade-off, of course, is you're even a part of your company. It's very similar to a marriage in that you're then financially, legally bound to this person or these people for the rest of the company's life, or until you legally unbind through a sale or repayment. Um, and then, as Jeff touched upon, impact and mission-focused investors. Um, in the case of, say, wood products, it could be somebody like the Rudolf Steiner Foundation, RSF, Social Finance, Calvert, organizations that have environmental bents. It can also be folks that are interested in investing in certain geographies. Like if you're around Mammoth or you're around Tahoe, there's going to be individuals that have a lot of love for those geographies. Of course, it's not limited to those two, but those are just a convenient example. And they might, let's say, be tech entrepreneurs that don't know anything about wood products, but when taught about the opportunity of how investment in wood products can help lower the wildfire risk for these environments that they love, that could help basically convert them into being, impact investors for that specific geography. So, it's very broad. People look at impact in many different ways. It could be a matter of diversity, equity, inclusion, could be environmental, could be other social impacts. And there's literally thousands of impact and mission investors from the angel stage all the way up through VC. And then, as Jeff mentioned, venture capital is something that we, of course, hear a lot about, being in California and being the tech capital of the world. But venture capital is almost never appropriate for wood products businesses, just because of the capital needed to scale and the expectation of returns from these funds. They generally want at least a 10x return in, relatively short time, 5 to 7, 5 to 8 years. And they also generally deploy large amounts of capital in order to make their investments make sense. So there could be instances where VC is appropriate. Uh, Also speaking from personal experience, like VC is almost never interested in a pre-revenue business from an entrepreneur who hasn't already had success in that field. So, if you're a tech investor, if you're a tech entrepreneur who's built a company and sold it, you might very well be able to get VC um, for your next idea before it generates any revenue. But if you're new to the industry, venture capital is just simply not going to be the means to go. It's not going to be available, and it's also just increasingly rare in the realm of timber. It's it's just not appropriate, And looking at venture funding on the smaller scale, like we mentioned, Blue Forest earlier, they are a venture funder, but that capital comes at a relatively expensive cost because they're taking on high risk and they need to price their capital appropriately, whether that be high interest debt or whether that be, relatively large slices of the pie in order for them to invest. But, if you find the right equity partners, the right angel investors, perhaps, somebody who's been in the industry and is semi-retired but has some extra capital to help, grow the next wood products company, to help emerging technology in a field that they love, they can be great investors because, unlike the bank or the grant from Cal Fire, there can be a real exchange of knowledge that comes with that and can be really beneficial. And on my personal businesses, um, my biggest investors were also my most important advisors. So they provided far more than simply capital. But if you're growing, a small business that, you hope to basically be your income someday, equity financing probably isn't appropriate because you're going to be left either paying a slice of your profits every year to your equity investors, or you're going to have to buy them out at some point. So it really depends on the circumstances. But of course, the best thing about equity financing is that you don't have the pressure, you don't have the repayment schedule that you get with debt. So they can be a safer means to get to be cash flow positive, especially for businesses that are going to take years and years to get off the ground.
I've
Big.
got interest from a foundation, but they haven't made a commitment yet. But the possibility is that they would present me with a PRI, a program related investment, which they would be in the form of a bond, I think. And so I would not need to make payments to them, but at some point in the future, they would be able to sell that bond to someone else, get their funding back to use in other programs. Um, so that could supply me with an initial equity to motivate loans and grants. So I'm hopeful about that.
Mhm. Yeah, so they would issue a bond, but they'd be the ones issuing and not you. You wouldn't have the duty of repayment.
That's my understanding.
Yeah, definitely seems worth exploring. But from what you shared earlier, you know, a product replacing peat moss, not having to ship a product from Europe to the United States and helping to get biomass off of our forest floors. It seems like something that um, impact investors could certainly be interested in. But it's a matter of, as I used to say, dialing for dollars, finding, creating a list and finding those warm introductions, finding a way to get in front of people, explain what you're doing, why you're doing it, why you're the person that should be doing it, and why you're the going to, make it a financial success.
Yeah, this has three major points that can be appealing to people looking for an impact. It helps to clean up the forest floor. It has major greenhouse gas impacts because peat moss is very gas intensive. This is not. And then thirdly, the horticultural industry really wants this. It's easy to demonstrate that they need to make a shift. They're increasing their use of materials, et cetera, and they need to make up a shortfall. So I guess I need to look for people who are interested in those three specific areas.
Yep. And you might very well find them.
Okay, thank you.
Of course. Um, so, I thought we'd take a few minutes. This chart kind of sums up everything that we went through as far as where you are and what your primary tool um, may be, as well as your secondary tool. Um, one one aspect of business stages is that it doesn't fit into boxes necessarily. You might very well, be in the middle of two stages, and everything is ultimately a matter of, well, what fits in with my circumstances now, and what will work for my cash flows in the future. So, and we'll make all of these materials available to the participants afterwards. We kind of did this a bit, but I think it would be useful, for everyone to, um, think about where is your business now? Where do you want it to go? And what is the capital that is required to get there? Uh, Jeff already shared. I don't know. I can't actually see who else is on the call. If anyone else is interested in sharing, you're welcome to. If not, we will just skip ahead because we're right on schedule right now.
I have one thing that just from experience that I think for these younger gentlemen, excuse me, I have a bit of a cold, um, about accounts receivable financing. I went down that road in the early 90s. We had a very good going concern. It was a new company startup in the lumber industry. And so we went with the company out of San Jose, and I'm going to say their name because this company broke our company. It was called Aero Fund. And the way it was set up is they advance us 95% of our invoice amount the day that we shipped a load of lumber. And then all of our receivables went to that company. Once they received the receivable, then they advanced us another 3%, so 98%. So they were using 2% of the money, which sounds very attractive. What we did not understand, and this is what I encourage anybody goes down this road, make sure that you have an attorney read the contract that you get into, because what happened to us, we had three corporate officers. I was one of them. After about a year's into this, we had a very good going concern happening. I focus on the sales aspect of it. And we had a dispute with the corporate officers, and we've determined to have one of them resign. And the Aero Fund found out that we were having an internal problem with our with the officers, and they put an injunction on our inventories. We had inventories at 5 locations throughout California, over close to $1 million. None of it was finance other than the receivables. And they paralyzed our company. We couldn't ship anything in or out, and we were bankrupt in 3 weeks. We had outstanding payables to all the major sawmills in Humboldt County, Simpson Timber, Louisiana Pacific, Pacific Lumber Company, Redwood Empire, and we were paralyzed. And in that time frame and back in those days, it was based on reputation. And my career started in 1977, and as a result of and a lot of it back then was handshake and good old boy network. Today, of course, now you got to sign all kinds of agreements, and everything has to be posted and notarized. But back then, this is again in the 80s and 90s, it was based on reputation. Well, my reputation was crushed as a result of this company. What it turned out to be, they were opportunists. They waited for opportunities like this to happen, and then they came in and they paralyzed and they bankrupt companies. So, just as a word of caution from personal experience, be careful if you're going down the receivable avenue. It sounds good, it looks good, but make sure you know who you're getting involved with. That's
I
my
think
little bit of experience.
sorry you went through that, but really great call out.
Yeah.
You absolutely have to, I would say, A, trust nobody, and 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 B, read the contract and have an attorney review your contracts to
Absolutely.
make sure that you understand the implications of what you're signing. I've seen plenty of equipment financing loans that look like they're pretty benign, but they'll throw in a line that the equipment financer gets a certain percentage of the company for an equipment financing package. There can be, other language buried in that gives company, rights of first refusal in buying a company and so on and so forth. Um, there's definitely a lot of predatory lenders out there. And sometimes if something seems like it's too good to be true, it might very well be. And you have to ask yourself, why are they willing to take on this risk for what appears to be significantly less expensive than other lenders? Um, what are they going to get out of it? Why are they willing to do this? And sometimes the answer is that, they have other rights and other potential financial payouts that you might not understand because it hasn't been presented on the surface.
Precisely. Good advice.
Yeah,
And
always have a lawyer.
I would add too that there needs to be that due diligence on legal representation. In other words, get some seasoned attorneys to understand the transaction, that have the integrity and positive reputation too, because there are times, not as good as, there's good high performing attorneys and there's mediocre performing as well as there are weaker ones. That's all.
Good point.
Just want to state.
Yeah, and also, on the equity front, um, find out who you're getting married to. There's lots of really great investors out there, but there's also those that, and I'm speaking from experience in the natural food industry, but those that present themselves as these kind, wonderful people, and then they end up, running away with the direction of the company, away from the founder's vision, and it can be really harmful for a company.
Yes.
So, do your due diligence, get to know people, check their references, see who's in their network that get the, pick up the phone, get the down low on them off the record and see what people say behind their backs. Because, once you give up a slice of your company, it is very similar to a marriage in that you're financially bound to these folks legally, and they have rights that might be uncomfortable for you.
Good point.
And then moving towards wrapping it up, some resources. Like I said, we'll email this out to participants afterwards. Um, there are, federal and state lenders. They all have people that you can reach out to get an understanding of the programs, see how you can cater your application to fit in with what they're looking for. Lots of mission-based lenders and investors out there in various forms. Reach out, try to set up calls, just even if it's just informational, 10, 15 minutes, get on people's calendars, explain what you're doing, ask them whom they know that you can connect with, who might be the connection that leads to the investors that you need. It's finding investors, whether debt or equity, is often not a linear process. It's often quite meandering. It can be really frustrating. But the people that get the investments are the ones that stick with it. One of the things that CAL FIRE has also paid for is office hours. There we have a few hours available if people want to have private, confidential, individual conversations about their situations, brainstorming about where to find funding, how to position yourself for grants or loans and such, and let's say just coming up with a first draft of your capital stack. Regine, what is the way for people to sign up for the office hours?
Yeah, I think Sherilyn set up calendar links for the office hours and included this group on those. Is that correct, Sherilyn? Yeah, she gave us a thumbs up. She's
Sorry,
muted,
I
but
can't
yeah.
get to my unmute button.
Yeah.
Yes, I haven't added everybody to them. I was waiting till after today.
Okay.
But I will send out those calendar invitations after this call.
Great, thank you.
Yeah,
Yeah, and just to
so
clarify, so those are like group calls, but if you're the only one in there, that's fine. If you want to talk about something that's more proprietary, we can either do a breakout or arrange to connect outside of that sort of group setting. And I think those are set for the 18th of March and the 30th. And then we have another office hour that at 10:30 in the morning, and there's one on March 24th that is specific to tribes, also at 10:30. And then I'll just also add, sorry if you hear my dog snoring in the background. I'll also add that through the end of the month, with our funding from CAL FIRE, our team can consult and provide technical assistance on any applications you may be thinking of pursuing to CAL FIRE or the Forest Service, or any other entities for that matter, in support of your wood processing endeavors. So please utilize us if that's helpful to you in your pursuits. And also know that we're actively pursuing funding to continue our program and being able to offer free support.
and to explicitly confirm, the office hours are free, correct? As well as the consulting that you're offering through the end of the month. So don't be shy. Lots of resources available to folks.
Yeah, and as discussed on yesterday morning's meeting, Martin will also be on those. I think he's on maybe not the first one, but on the office hour on the 24th and the 30th. So questions related to the actual equipment, he's available during those times, and can similarly provide assistance outside of those office hours if needed, given his position and our funding.
And that really wraps things up, unless anybody has any last minute questions, comments. Great. Well, thank you very much to everyone who joined today. My email is below for any follow-up questions. Everybody, of course, has Regine's and Sherilyn's emails. We look forward to providing additional resources as we can. And as Regine noted, the consulting that's available to help with applications and such is only through the end of the month because of the grant that she's operating on. So if you're looking for some assistance on that front, please go ahead and schedule relatively quickly.
Absolutely. And also, for what it's worth, I think some of you probably know, but for those who don't, the Forest Service Region 5 specialist, Jim G. Pasquale, who was on our call yesterday, he will consult with grant applicants So if you have a project concept, definitely reach out to him to bounce it off of him, get his feedback on your tentative scope and budget. Forest Service will, or I'm sorry, CAL FIRE rather, will only consult for one 25-minute consultation period. You go onto their website, they have an email address. You want to email that, and they'll send you a Google Doc form to schedule yourself for that consultation. So definitely take advantage of those opportunities to help refine your concept and application if you plan to pursue funding. And thanks everyone for joining us today. Feel free to reach out with any questions, and yeah, we're here to support your efforts. So let us know if we can help.
You're all doing very important work in the state that we love. So thank you for that. And if we can be of help, please do.
Thanks a lot, Neil. This has been very informative.
Great.
Thank you, Neil. Thank you,
Thank you.
Regine, and thank you, Sherilyn.
Great. Thank you.
Thank you.
Take care, everyone.
Everybody have a great
Bye-bye.
day.